Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, January 23rd, 2020. We'll start out here with the futures because I have a quick pictorial here from the last a little over a week now. And so what we've been watching and highlighting is this channel right here on NQ. We have a well-defined price channel, particularly most importantly that uptrend line. So I color-coded the levels, of importance with the yellow uptrend line, and then that 91.10 level. I have that line yellow, and so going back all the way back here on the 15th, right about here. Started picking up this channel and saying that's a level. We're in an uptrend until unless that breaks. Let's look at those charts. We'll just run through those real quick. So here it was. That was zoomed out a little more on this one, but so you can see the price channel up here and that yellow line. That was the dates are always down here, down at the bottom here, time and date stamped on the charts. This was last Wednesday of last week, the 15th, before the market opened, and there it was. So we have, again, we're in an uptrend with sell signals to come when we get a break, a solid break, and especially close of that trend line there, the price channel, and it just continued to form from there. That was last Wednesday. There was Thursday, we came down, remember we were here, went to the top of the channel, went down here. I've talked about that quite a bit. The MO when you're in a price channel is to go long at the bottom of the channel, then sell your longs or reverse to short and go down to the bottom of the channel and wash, rinse, repeat. And that's been the MO for a while. That was down here, that was the 20th, and then we have the 21st. So again, not a lot of updates, so I don't know what happened to that chart. Where would it go? Here we go, 15th. Start clicking on the wrong ones. There's the 20th, 21st. I had the 21st here somewhere. Either way, same story. You can see the 22nd, another successful test of that level. That was yesterday. Then this morning. Okay, there it was. There's the 21st. So there it was on the 21st. NQ remains in an uptrend for now, successfully defending the uptrend line support since last night with a sell signal to trigger on a solid break and or close below. And that's key, guys. You want to see, as you can see there, sometimes and quite often in a strong uptrend, whether even in a downtrend, you get the same thing on downtrend channels. You get a brief spike intra-period, but whatever time frame you're trading. In this case, I'm using the 60-minute chart for this analysis to identify this trend. So you need to see a 60-minute close, a solid 60-minute close, because these whipsaws are not unusual to see. So that was on the 21st. I'll bring it up to yesterday, the 22nd. I have it somewhere here. There's the 22nd. And I mentioned too, we had another successful test at the bottom of the channel late Monday evening. Remember, the markets were closed on Monday for the Martin Luther King holiday, and so we successfully held that. Then we went to the top there, and at that point, I said, that you could certainly enter a short trade and swing down to the bottom of the channel. And so here we are today. This was this morning. Same story, and I want to bring this up too for especially those that haven't caught up on my analysis in a while. I've been stating that we have the 5 largest companies in the world, the 5 largest top components of the Nasdaq 100 plus Intel tonight. Intel starts off tonight. Intel's number 6. Then the rest of the FANGs, Facebook, Amazon, Apple, Microsoft, and Alphabet all report over the next week or so here. And that is going to most likely determine where the market goes from here. If we're finally going to get that long overdue correction, I suspect this will be the catalyst. Like I said, if missile strikes in the Middle East against U.S. air bases from Iran, if that doesn't bring the market down, the only thing that's going to do it right now with the sentiment so strong and the momentum strong is either negative earnings reports, missed, or guidance. And I've said this too in recent videos. Sometimes I've seen stocks blow the cover off the ball with earnings as well as give positive guidance. I used an example of Apple, I think it was in 2015, or maybe even more recently, and only to see the stock initially pop and then get a fade and then put in a lasting top. So something to consider. And what I always say, it's not what the company reports. Don't read too much between the lines. If Apple or any of these companies beats expectations, they all do a pretty darn good job of managing it usually, but there are certain things that the market or the street might pick up on, institutions that they don't like, and there are times where everything looks good in a stock, or it goes the other way too. Everything sometimes looks bad and a stock rallies. Usually you're going to see that towards the end of a downtrend when a company misses, gives a dismal earnings report or guidance, and yet the stock then turns around and that's the bottom. That's usually after it's been washed out. So when you've had such an extended rally, you're really looking for, if anything's going to happen, it's most likely going to be the opposite. A sell-off following a positive earnings report. So that, all I'm trying to get at is that stuff can go either way. I trade technicals. I do incorporate fundamentals into my analysis, but I just wanted to point that out in case you're planning to trade off, an earnings beat or anything like that, or a miss, because sometimes they might miss and the stock holds support. So you don't have a sell signal if that's the case. Okay, so the point being also is that I don't expect, although anything is possible, and you got to be, on watch for it, I don't expect a lot to happen. The market, as well as individual stocks, they usually go into a holding pattern just before earnings. Who wants to take a new position? Who wants to buy Apple after such a strong run-up, buy right in front of earnings when there's that chance that, hey, they might miss the mark, the street might not like what they hear. And likewise, who wants to short when the uptrend's been that resilient and they're above trend? So that's most likely scenario, guys, is this is a good week. There's other trading ops out there, but right now, as far as the broad market, and it's been for a while, the volatility is relatively low. We still have that low price compression, and chances are over the next week or so we'll go up, down, but not very far. And I would probably suspect we're not even going to make it continue up this channel much longer. We may break the channel and come on and hit that S2 support. Let's continue on. Almost done here, and I'll look at the Qs and SPY, and then we'll wrap this up. So that was today, the first chart I posted today this morning, and then I followed up with, let me find the second one. Yeah, then I followed up with this one. There's a good example right there. Is we had an intra-period dip right after the open. The market sold down, just like it did here. You can see that little candlestick, the shadow, or you can call it a tail when it's down below the body, and then boom, reverse right back up, regain the channel. So there's a false breakdown, and that's a bullish technical event. Anytime you break support. Now again, it wasn't, if traders jump the gun, then that's why you want to wait, especially in this market, wait for a solid 60-minute close. And even then, I said this earlier, even if we had a 60-minute close, is that an all-in short signal? No, for the reasons I just mentioned. Earnings is coming up. From my experience, you tend to get an increased amount of false breakouts and false breakdowns, in other words, whipsaw signals, right as you head into a key earnings week. It's kind of like trading right in front of a big FOMC announcement where, nobody wants to take any big positioning, so you're usually not going to see any big moves. Therefore, be very selective on the breakouts you take, especially if they're correlated with the stock market. Now, if you want to trade, crude oil or natural gas or soybeans, that doesn't, you can take a breakout on face value there. Earnings doesn't impact those. They don't have earnings. So that's where we were today, and let's see where we finished the day. That was again this morning, shortly after the open, and that's it. So we had the false breakdown, or not false, but it wasn't even really a sell signal because we never printed the close. The NQ successfully held the support, and boom, right back. I added this yesterday and covered that in the recent videos, this midpoint of the channel here. And I said, the midpoint of a price channel often acts as support and resistance above. And the way it works is once you break the bottom of the channel, the midpoint, I should say, you head down to the bottom. And then that's resistance. Once you break it, you usually head up to the top and vice versa. So you can see it's resistance there. You couldn't get above it, couldn't get above it, couldn't get above it. Boom, broke above. And the next stop was the top of the channel. Support, 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 finally broke it, and it didn't just meander on down. It was an impulsive drop to the bottom of the channel. So again, this is two trading ops within the channel. You can go short and go long on the tops and bottom of the channel, close your longs, and you can also micromanage trades if you're a very active trader along the midpoint of the channel. Look where we closed today, right there. Well, when the market closed, this is actually a live chart. That's where we're at right now. Is these are they may have shut down. It's 428, but yeah. So that's where we're at, and you would expect a reaction here most likely. Being that we just came off the top, we could punch above it, and if we do, then that opens the door to the top of the channel. But I would say reversal here. So If you're a very active trader, you want to game a quick pullback in the Qs tonight, probably to that 92.06 level. That's where I think we go from here. But that's micro stuff. Again, that's all you can really shoot for right now, because it's unlikely the market's going to make any really big moves until they hear what Facebook, Amazon, Apple, and all those companies have to say. And of course, QQQ, same thing. I have a couple different boards. So what I'm looking at here, you have a price channel. This board just shows you the bottom line. There's the price channel. This is your divergence line. The divergence is starting to steepen there. You had a price channel here in QQQ. You broke above it. Kind of a little sideways correction, but we held horizontal support, and that's why I highlight these levels below. Now this is the chart I've been posting on right side of the chart more often. Here is this one with this, what I call the BOD, or benefit of the doubt trend line. So the yellow trend line is the primary trend line on this 60-minute channel on QQQ. It's comparable to that trend line on NQ I showed you, but I have what I call benefit of the doubt trend line, because you've had a few spikes below. The trend line starts here, exclude that little wonky, erroneous candle there, snap back up. You have a lot of reactions on the yellow trend line. And then the few whipsaws that we had, if you look at the bottom of these candles that I'm circling here, 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 and here, that gives me what I call a benefit of the doubt trend line. And what that means is the trend's strong. You want to increase the odds if you are planning to short the Qs. You don't want to short the primary trend line. You want to give it the benefit of the doubt, because this trend line now has at least 4 reactions on it there. But again, if that were to break tomorrow, let's say Intel does something tonight. I don't even know if they've reported yet. I'm not looking at, I don't have that screen up right now. That could bring us down, but then you have Apple, Amazon, Facebook, Microsoft, all of those guys coming up. So, and again, Intel is, the 6th largest component, but it's dwarfed by the market cap of those top 5 FANG stocks. So that's it. Let's not read too much more into it. Good time to really either take some time off trading for the next few days, focus elsewhere. I did an extensive video today on the stocks that are reporting this week, and I've covered the FANG stocks. I posted that for subscribers today, showing that the majority of the charts that I'm watching the trends are bullish in just about all those market leading stocks that are about to report. There's no arguing that, but they're all in bearish technical postures. And what I've said from my experience, if a chart has a clearly bullish or bearish posture to it, again, don't confuse a bearish chart with bearish technical posture with meaning the stock has rolled over, or you have a sell signal. If you have like this, for example, you have an uptrend here, you don't have any sell signals, but you have divergences that have continued to build. They've been building on the 60-minute charts here, the weekly charts, the daily charts, even the monthly charts. But what you need is a sell signal now, because those divergences can continue to build. But back to my point is, if the chart is not very clear, if it's somewhat ambiguous to me, it can't make a strong bullish or bearish case, you head into earnings, it is a complete crapshoot. That stock can go up or down after earnings. It can gap against you if you have a position. So I try to stay away from those. However, it's been my experience, if a chart is clearly bullish or bearish, the posture of the chart going into earnings, more often than not, which is not always, but more often than not, well over 50% of the time, the stock will go down. And again, I did a video today showing you that. I went over the stocks that reported earlier today, and I went over the ones that will report tonight after the bell, and told you which ones I expect will be down. And I'll follow up on that video tomorrow. I'm going to do the same thing next week. I'm going to do a video either tomorrow on Monday showing not every stock reporting next week, just those big FANG stocks and some of the market leaders. Show you which ones have bullish or bearish charts, and which ones, if you want to roll the dice, and like I said, I wouldn't pick just one if you're going to have a earnings play. It's aggressive to take a trade right before they report, again, because they're going to gap they can gap above or below where they closed the day before, and that can either go for or against your position. However, if you want to diversify, take a handful of, let's say, the most bullish or bearish charts and go long. That's where I think the technicals can give you a pretty good idea of where the stock is going to trade after earnings. So let's wrap it up here. Oh no, let's not wrap it up here. Let's look at SPY, and then we'll wrap it up. SPY has already broken trend on the 60-minute chart, but as I often say, you at least I wouldn't short even if I were to trade SPY. I prefer trading QQQ, but if one of these major indexes, either SPY or QQQ, breaks down and the other doesn't, I wait for the second to give a sell signal, especially now during this resilient trend, earnings season, all that. So that is a clear breakdown to me. It's a clear, well-defined price channel. A lot of reactions along that channel there to define the uptrend, I should say. It's more of a wedge on SPY. You could draw a price channel if you want to go like this and just say there's your top line there. Come on, bring it on down. There's your bottom line of your channel. Breakdown. It was impulsive, everything you want to see, but here's another example. You had support right below, around 329 or so. And on top of that, at the same time SPY fell here, QQQ and NQ fell to their comparable trendline support and reversed, and they bought it up. So that's what happened here, and that's a takeaway. That's a lesson that I like to say I think is critical in trading. If you're trading indexes, so with these two main large cap indexes, you can throw the Dow in there if you want as well. It doesn't hurt to watch, but SPY and QQQ are more diversified. Dow only has 30 stocks. You have S500 in SPY, 100 companies in QQQ, and those are the two I like to trade. Anyway, okay, we'll wrap it up here, and let's see what Intel does tomorrow. And as I say, it's not the initial reaction. I've seen stocks rip or dip immediately following their earnings. You still have the conference call that comes out later. That can turn things around based on the guidance they give. And then, most importantly, what happens the next day at 9:30 in the morning when the opening bell rings, and all the institutions are then able to trade in a much more liquid market. So that's what I like to do. I call it let the dust settle after earnings, and especially with a lot of bigger companies about to report over in the next week or so. That's when we'll have a good idea. Okay, is this rally going to continue from here? Were earnings that good and expectations and guidance that good, or are we going to finally get that long overdue correction? So we'll see soon. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great evening.